Aloha and welcome to the East Oahu Realty Report First Quarter 2017.
If we look at the big picture, we can see that house prices in the United States rose just over 6% in 2016. Although interest rates rose sharply during the fourth quarter, our data shows no sign of a home price slowdown. Interest rates still remain historically low.
Despite a sharp increase in mortgage rates in the latter part of the year, U.S. home prices grew by a robust 1.5% between third and fourth quarters of last year. Although this price appreciation exceeded the rate of inflation in the overall economy, it was very much in line with what we have seen for many years now. Over the last 5 years, the average quarterly increase has been approximately 1.4%.
When we look at geographic trends in our latest data, what stands out is the extraordinary consistency in the list of states with the fastest appreciating markets. Florida, Oregon, Colorado, Washington, and Nevada had the greatest appreciation over the latest 4 quarters. For several years, these same states have regularly ranked in the highest appreciating markets. Hawaii was ranked 35th in the nation with 4% price appreciation, after states like number 1 Oregon and number 2 Colorado with around an 11% increase.
The city and county of Honolulu is up almost 7% year over year and remains strong in price appreciation. Honolulu is ranked 71st in the nation after cities like number 1, Palm Bay, Melbourne, Titusville, Florida, and number 2, Seattle, Bellevue, Everett, Washington, both up around 12%.
If we look at the nation's financial stress index in the first quarter of 2017, it is at negative 1.3 points. You can see we are down from the index's highs of nearly 6 points during the last recession, highlighted in red. In March, all 6 supply indicators have jumped up significantly by double-digit percentages, from active and new listings to months of supply. We have not seen double-digit growth in all 6 indicators like this in many years. Months supply still remains historically low at 3 months. There were almost 800 single-family home closings in the first quarter. This is up 1% year over year. Condominiums had more than a 7% jump to over 1,200 sold units. Over time, we can see the peak and trough pattern that demand follows.
If we overlay the month's supply on this demand chart, we can see the inverse relationship between supply and demand over almost 3 decades. Currently, supply is low and demand is high.
The effect of this low supply and high demand is likely what is putting upward pressure on median sales price. In the first quarter of 2017, prices rose almost 4% in both categories to $752,000 for single-family homes and $400,000 for condominiums.
If we compare market velocity and price point on Oahu single-family homes, we see it is fairly consistent at the low end of prices at just below 20 days on the market to sell. Once we hit 1.1 to 1.9 million, it jumps up 50%, and then at 1.9 million plus, it more than doubles again to 73 days. The breaking point is at about 1.1 million. Anything below that in single-family homes, on average, is sold in several weeks, and above that could take months. For condominiums, the break occurs roughly at 475,000.
Days on market is a good measure of market velocity, or how quickly homes are selling. In the first quarter, market velocity for single-family homes is just over 2 weeks. Market velocity is up about 11% for single-family homes and 21% for condominiums.
In this chart, we can see the amount of real estate loans relative to total bank assets over the last 40 years. This indicates bank exposure to real estate purchases. Too low of a number is negative, and too high can indicate a bubble. We are currently at 26%. This is off 9 points from the ratio's high of 35% in the peak of the market in 2006.
The line in the graph represents an index that tracks Hawaii's economic activity. We can see the last 5 U.S. recessions highlighted in gray. Since the spring of 2009, the index has recovered almost 39 points.
In the first quarter, visitor days hit about 21.3 million. This was up over 3% year over year.
Visitor spending was almost $4.4 billion in the first quarter. This is up over 10% year over year.
Arrivals in the first quarter grew about 3% year over year to nearly 2.3 million visitors. Japanese visitors led our increases in spending and arrivals in the first quarter of 2017. This was due to increased air service to Honolulu and the launch of direct service to Kona from Haneda in December 2016.
In summary, for the first quarter of 2017, prices were up for both categories and supply remains low. Market velocity is just over 2 weeks to sell, and there is stability in Hawaii's economy.
The neighborhood of the quarter is Kailua Waimanalo single-family homes. Demand is up.
There was a 15% increase to 63 closed sales in the first quarter.
Supply has decreased. There was a 5% decrease in new listings to 98.
This high demand and low supply in the first quarter may have caused Kailua Waimanalo single-family homes median price to rise 8% and just crack $1 million. These numbers earn Kailua Waimanalo single-family homes the neighborhood of the quarter.
With the help of a proven professional, you can navigate this often confusing and difficult process with ease. When you work with East Oahu Realty, you work with a team of knowledgeable and experienced professionals equipped with special expertise. Thank you for watching, and until next quarter, aloha.